morning, everyone. So on Friday, we saw further some corrections in the US market, mainly driven by tech stock. Nasdaq was down higher at over 1%, mainly on account of increasing bond yield. The bond yield has moved up very sharply. In last two trading session, it has moved by 10 basis point. And but if you take the 1 month journey of 10-year bond yield in the US, it has moved up by almost 1% from 1.76 to 2.76. So that is putting up some pressure on the valuations of IT stock, and which is leading to higher decline in the US market. If you take if you see the futures of the market, they are also marginally down, but Asian markets are seeing larger decline, mainly in Hong Kong and China. This is mainly on account of increasing restrictions in the China for COVID cases, and also there again the IT stocks are down higher. There the reason is a bit different. Their Chinese government is looking at putting up some restrictions on data monopoly of few companies. So that is leading to decline in the IT stocks in mainland and also in Hong Kong. And the IT stocks are down substantially, and overall index is down by over 2.5% in Hong Kong and China. Even commodities are also seeing larger decline in China today. If you see oil, that is around a similar level as we were talking on Friday of around $100. But apart from that, if you see the other commodity like aluminum is down by around 2.5%. Iron ore is down substantially by around 4.7% or almost 5%, and steel is down by around 3%. All these are mainly on account of increasing COVID cases and higher restrictions in China that is leading to decline in commodity prices. So overall, seen in the world market is indicating towards more of a decline in Asia, in Indian market as well. So we may see some corrections in today's trade. I'll request technical team to take up from here.
Good morning, all of you. Last week we already mentioned that Nifty downside support place around 17,600, 17,650, and upside range is 17,900, 18,000 in upside. Friday Nifty managed to close above 17,750 above range. So we expect range in Nifty trading in upper range, and this weekly we expect the upper range is 17,800, 900 in upside, and downside 17,650. To immediate support in Nifty is 17,650. Today Nifty slightly open a negative note, but Nifty managed to sustain above 17,800 and close above that range. Then we expect further momentum, and with Nifty trading between the 17,800, 17,650 at this range. To expect any move towards 17,650, then again Nifty bounce back at that level. So we can see the closely watch these important levels. Bank Nifty also trading the upper range, that is 38,000, and immediate support place around 36,670 at downside. If Bank Nifty managed to sustain above 38,000, then we expect further momentum. Otherwise, Bank Nifty trading downside 36,670 first support zone, and below that 37,400, 37,200 at downside, next important support zone for Bank Nifty. Nifty Finance also trading the near the resistance zone, that is comes around 17,500, 520 in upside. Support, important support place 17,400. Below that level 17,300, next important support for Nifty Finance. So today we expect slightly negative in first half. If Nifty manage, all three index manage this support range, then we expect bounce back again in downside. In stock specific, Godrej Property looks positive at current level. 1660 is an important resistance and are close above that important resistance zone to expect further momentum to continue towards 1720 1740. Support place around 1640 1630 at downside. Ultratech Cement also looks positive at current level. We expect coming few days trading above 7,072 in upside. Support place around 6650 at downside. That's it for technical. Derivative I can carry.
Yeah, thank you. Because see, on the derivative front, majorly there are two things which are important. First is the premiums. The premiums have become very high. Generally, there are 30 40 points premium on the index in the future, but now the premiums have risen to 90, almost 100 points. So that is one area of concern. Um, then secondly, and very importantly, the open interest. The open interest seems to be stagnant only. There's no further increase or decrease whenever you're seeing buying or selling. So that needs to decrease further. So we need some light. More light open interest where once that happens you can see further buying coming in. Thirdly, Nifty is closed below the 18,000 levels, and the 18,000 call also has a considerable amount of open interest built up. You're seeing calls of 18,000 and 18,500 having huge open interest built up, while on the put side there's not one put strike where there is huge built up. Yes, there is built up considerable built up at 17,500 put strike, but it's not as huge as the 18,000 or 18,500 calls built up. So then the put writers are not very comfortable writing puts at this point of time, and that is one area of concern. So looking at the overall data, it looks like Nifty is likely to fall down, come retest its 17,500 levels, which is a good support area, and then probably again look to bounce back from there. But till then, probably some amount of selling pressure is likely to come in. So whatever you've bought, keep stop losses, and if those are triggered, exit positions, because there is a likelihood of a 250 300 point fall in Nifty from current levels. Now, looking at the stock specific front, there are some stocks which did pretty well, um, like Ultratech Cement, NMDC, Bharti. These stocks are likely to witness further buying, even though Nifty is witnessing some selling. These have seen some strong OI built up, or delivery built up in the last few days, and they are likely to move up further. So Ultratech can go up towards the 70-100 odd levels. NMDC is seen a very very good OI built up, and it can move to 190 odd. While Bharti consistently, continues to witness OI decrease, and in the last 6 months, it is one of the stocks to have shared 50% open interest. So very likely, this stock is also likely to move up. So these stocks can be bought even in this fall. That's it from my side. I'd like to ask the fundamental team to take more, please.
Good morning. JLR Q4 volumes have improved marginally. On a QOQ basis, they were up 11% in terms of wholesale sales. And although on a year-on-year basis, they declined by 38%. So this is reflecting that there is gradual improvement in chip supply on quarter-on-quarter basis. Although retail sales were flattish quarter-on-quarter because dealers are keeping inventories below normal levels. Demand continues to be strong with order book growing to a record level of 1,68,000 units, which is 14,000 units higher than the December level of 1,54,000 units. So expect a gradual improvement in chip supply to continue throughout FY23. Praj Industries, in collaboration with Automotive Research Association of India is developing a binder that will help in blending ethanol with diesel. Diesel does not blend easily, as petrol does with ethanol. So that is the reason that Praj is developing this binder. This project is in testing phase right now, and once the results are out, Praj will approach the government for policy interventions. Although the efforts are at a very initial stage, so can't say much about what will happen in future. But if successful, then the addressable market for Praj will increase by almost 2.5 times, as diesel consumption in India is at 88 billion liters compared to just 37 billion liters for petrol. So overall, sentimentally, it is positive for Praj Industries. Credit Access Grameen came out with a Q4 business update where the gross loan portfolio has grown by 22% year on year at 16,600 crores. So that is gradually accelerating. However, on the asset quality side, the improvement is much better, especially if we look at the portfolio at risk performance for Credit Access Grameen, excluding the subsidiary performance, because subsidiary size is very small. So I'll just focus on more on the standalone performance. So the overdue by 30 days has declined from 5.4% in December quarter to 3% in March. So this is a very big decline. Also on a 60-day basis has come down from 4.8 to 2.6, and 90-day basis, which is GNPA, has come down from 4.2% to 2.3%. So things are normalizing, faster than expectation, and we can expect that even by next quarter things will further improve. So expect stock to again re-rate back to where it was trading pre-COVID. So there is still some steam left in the MFI sector, and expect the whole sector to outperform. That's it from my side. Thank you.
Good morning, everyone. SMS Life Science has announced that they have completed USFDA inspection at its API facility at Telangana without any observations. So this is, we believe, is positive, but sentimentally positive. Reason being that it is becoming the status quo. Though the company has not got any negative observations from the inspection, so it's good. But this is maintaining the status quo on the plant. So earlier also it was approved a plant. Shoppers Stop has announced that they have now sold 19.5% stake in Crosswords, and now the remaining holding is around 29.5. So this is overall positive for the Shoppers Stop because they're trying to focus more on retail and beauty. That is why Crossword becomes the non-core business for them, and that is why they are selling the stake in that. So this is positive for Shoppers Stop, and we are anyways very positive on Shoppers Stop, and covered this under our Diwali picks and maintain our outlook for future, positive outlook for future as well. Thank you.
Yeah, good morning, everyone. Wipro has appointed Anish Shansha as CEO of Asia Pacific, India, Middle East, and Africa region after NS Bala resigned. This is neutral to Wipro. Veranda Learning Solutions IPO, the company is listing today. That the issue details consisted of fresh issue of rupees 200 crore. The company provides comprehensive long-term and short-term preparatory courses for UPSC, CA, and banking, etc. Courses. We had recommended an avoid to the issue since the company is at built-up stage and the growth has been supported by acquisition and turnaround of the company, making it profitable and growing organically, had created uncertainty. At the upper price band of rupees 137, Vedanta was offered at EV by sales of 9.5 times annualized September sales, which we felt is expensive. Other than this, Infosys is to post numbers on 13th of April. The company is likely to post a revenue growth of 2.5% in CC terms QOQ after a high base effect in Q3 FY22, wherein the company has posted a growth of around 7%. EBIT margin is likely to be stable Q on Q. The key things to watch out for the company would be the demand outlook and the revenue guidance for FY23.
Yeah, GTPL Hathway has declared the result, and the results were more of an okay. Nothing so great movement in growth and all. EBITDA came in at 3% decline quarter on quarter and 11% higher than year on year. So nothing so exciting. Share is trading at around 11 times TTM FES. Apart from that, Camlin Finechem had said that they will be shutting down their one of the plant in Bharuch. That is Dahej. This is the new plant which they built up around 2 years back. So coming up for maintenance for 1 year seems a bit surprising. But anyhow, 1 month lockdown will impact Q1 earning of Camlin Finechem. So will be negative in the near term for the Camlin Finechem. So that's all from us. Thank you very much and have a good day.
Subscribe to our YouTube channel for in-depth interviews of India Inc. and press the bell icon so that you do not miss our updates.